and welcome to the Ethical Investor Podcast. My name is Amir, and I'm really excited to be joined by Bedis Mizali once again to discuss the latest updates in the critical minerals as well as precious metals industry. Hello, Bedis. How are you doing?
Hello, Amir. Happy to have you back again for a discussion. Thank you for inviting me for the second Crispy Talk, and hello to your audience.
Great. Thank you, Bedis. And before we start the conversation, I just want to say, hope everybody is safe in the Middle East, and we really hope the situation settles down quickly. So just to start off the conversation, Bedis, tell us what is happening in the market for critical minerals and precious metals industry.
Over the past few weeks, we've seen a sharp correction in precious metals. That feels painful, but it's largely a market repricing rather than a collapse. Gold has pulled back from recent high levels, and silver has fallen even more dramatically. The drivers are a mix of macro and positioning. It's not a fundamental deterioration in a long-term demand. So it's safe to say that this is just a correction of prices. The US dollar has strengthened, making dollar priced gold and silver more expensive in other currencies and reducing some international buying interests. Markets are also parsing US inflation data and interest rate expectation, with the Fed now signaling a later start to rate cuts, which reduces the market's opportunity cost of holding yield-bearing assets relative to non-yielding bullion. Meanwhile, thin liquidity around the Lunar New Year has amplified moves. Finally, silver's plunge has been steeper than gold's because it is not only tracking the precious metals complexity, but it also reflects margin hikes, forced liquidation after earlier parabolic gains, and weaker liquidity. So here's the bottom line. This is a major correction following an extended rally, not evidence that safe haven demand is structurally gone, especially after ongoing US-Iran war. So precious metal remains within broader macro narrative. It's not just the markets repricing today.
I guess, yeah, of course, the change that is happening in the Middle East with the Iran war, that is sending a lot of shock waves. And perhaps that's why there's a lot of volatility in the precious metals. So that is about the precious metals. What about the critical minerals industry? Is there any correlation between the precious metals and critical minerals industry?
It's a very good question. Straight talk, Amir, the short answer is no. There's no observed tight structural correlation, especially when you compare precious metals with critical minerals like lithium, cobalt, or nickel. Academic research looking at commodity systems shows that precious metals, industrial metals, and critical minerals behave differently based on underlying drivers. To see the asynchronicity between these three families of metals, I refer your audience to a very interesting paper called Volatility Persistence in Metal Prices, written by Luis Alberico Gil Alana and his fellow Carlos Ponza. It shows that precious metals move with monetary and macro uncertainty, such as inflation, real yields, dollar strength, as we said before, while critical minerals are tied to industrial demand for electric infrastructure and energy transition technologies, and of course, supply chain dynamics. The only exception is silver, because it occupies a unique place since it still has a traditional monetary property with gold, but roughly half of global silver demand comes from industrial uses such as solar panels, EVs, and electronics. Meaning its price dynamic can sometimes overlap with base metals in certain conditions. That does not make it structurally correlated with critical mineral market. Therefore, my headline, it's not the headline with capital T, but my headline is that these 3 to 4 families of metals, they are entangled under stress, but they don't share a persistent correlation like crude oil and copper.
Thank you, Vedis. So It is quite well known that silver and gold are correlated with each other. But it is good to know, the precious metals and the critical minerals, they structurally, as you said, do not have any correlation between them. So that risk is on the one side. Then there is this Iran war risk, which is putting a lot of pressure on macroeconomic factors such as inflation, policy rates, etc. So what are the key market risks that you are envisioning for these two industries?
Okay, very, very succinct answer. This is what Wall Street strategists are watching. Macro and policy risks. So again, the dollar strength is everything. The dollar appreciation tends to pressure gold and silver. The interest rate expectations and real yields. So delayed rate cuts or sticky inflation increase the opportunity cost of holding bullion. Gold and silver historically underperform when yield expectation rises. Liquidity and technical market risks. We can consider that thin trading windows and margin hikes can provoke outsized volatility, especially in silver given its smaller market size. Then you have a positioning risk. Profit taking and overextended positioning have forced leverage traders out, creating feedback loops in prices. And then finally, we speak broadly about it before in our last podcast, and I mentioned it just in the previous question. Geopolitical and sentiment risk is, the pinch of salt that can enhance retail portfolio investing. Safe haven demand is very sensitive to geopolitical headlines. When tension flows into precious metals, can quickly retreat, which we have observed recently with Greenland or with Iran. Other risks in broader metal markets include concentrated supply chains and geopolitical shocks, which could trigger sudden price spikes or policy intervention. It's not at all a fantasy to speak about, in the past we observed an oil shock, but it's not a fantasy to observe in a future a critical mineral shock, a blackmail of certain country over other country about the supply of rare earth, for example. So I'm quite sure Greenland or Iran subject will come on the table again and again and again.
Yes, absolutely, Bedis. And it is creating a lot of volatility in the market, whether it is Iran war or US taking over Greenland in the future. So considering ethics and volatility, how would you position your portfolio?
It's a very good question because we are now literally on the flesh, not the fat, the podcast. We are speaking to people who wants to invest with their heart, not just their brain, with their ethic, not just their return. So they need to look to some pillars. For long-term holders, correction can serve as tactical entry points in gold and silver if the narrative of uncertainty and real yield volatility persists. Precious metals ETFs, so top tier physical ETFs, remain liquid and are preferred for diversified exposure. Now, when you speak to industrial players, definitely there is this silver dual role in industrial technologies underpinning structural demand despite short term swings. When it comes to critical minerals, again, it's tied with electrification. It don't move in lockstep with platinum, gold, silver, but it offers structural growth opportunities in decarbonization pathways, especially in battery tech and renewable. So if someone wants to invest with their heart and not just their brain, they need to use correlation dynamics rather than simple long bet. And definitely read the newspaper. I'm going to give you names because we spoke last time when we have our exchange. If you look to CMOC, if you look to 80 Mile PLC, if you look to Amarok, you can definitely range bound markets and you can create option-based strategy around key support and resistance. We are not here to give you advices. We are here in this talk to suggest you insights. So finally, concerning Iran, the civic way to frame it is that Iran was the match, not the wood peel. The war premium gave gold an extra push and a lot of macro driven volatility. But the long term story is still about debt, policy, and central bank demand. So, over the next stretch, the most likely path is a structurally bullish trend with pockets of nasty downside. As and when the conflict cools or rates expectations shift, in other words, it's still a bull market, but one you have to respect the risk of a second correction instead of treating gold as a one way, no volatility safe haven. Let me conclude in words that will touch directly your audience. Especially in this period of Ramadan, there is a verse in Surah Imran, the Quran, that says the enjoyment of worldly desire, women, children, treasures of gold and silver, fine horses, cattle, and fertile land has been made appealing to people. These are the pleasures of this worldly life, but with Allah is the finest destination. I don't have the competence to do a tafsir, but my very private understanding is that we all want a good life with good family, pleasant wife, calm children, and good business. But these opportunity of markets that we are delivering in this podcast are not just here to make your portfolio thicker, but it needs to make you think what you want to do with these profits and benefits. My take is that when you have extra money, when you have fat in your portfolio, always be sure that you distribute this extra money across the poors, those who are in need, not just family and friends, but people that may need help.
Yes, and there are so many people around the world who need your help. We should always strive to give out to those who are in need or those who are in dire conditions. But hey, Vadis, thank you so much for joining us again and providing your perspective. I really hope our audience has enjoyed this conversation. If you haven't hit the subscribe button yet, please do so, and we will see you in our next episode. Thank you, and Allah Hafiz.